really care what the market's doing. We're just trading what the market is giving us. So we'll get started here. Again, I'm with Rightline, and this is the Compass Options trading room and the alert service that I actually run. All right, the first thing I need to do, of course, is get the disclaimer out of the way. And again, all signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky. I think we all know that. And so you should never trade with more money than you can afford to lose. And neither myself or Rightline Trading is our licensed financial advisors. So we won't be giving financial advice. All right. By the way, if you have any questions, you can go ahead and put them in the question box. If you'd like to get more information at the end of the presentation, more details on the services, etc., go ahead and just put your name and phone number or your Skype username in the chat box, and Rory will give you a call and answer any questions you have. And I'll answer any questions that come up here that I possibly can. All right, so this is a SPY super system. This is something that's kind of just a welcome here slide. But we track institutional money flow with the Compass system, which is one of the key points of how we're able to find high probability trade setups. All right, and this is just kind of a graphic presentation of the alert service. I have a Compass alert service that we send out text alerts, SMS text alerts that come right to your phone, and you can take the trades on the go, so you don't have to be watching your computer all day long. And we just had about 4 or 5 really nice winners right in a row here for us, for the room and the alert service. The first thing I want to cover, and I always cover this first because I think I think most traders or a lot of traders know this, but what is it that moves the market? You know, you think about when you look at the SPY and you see it's trending up or it's trending down or it's shopping around. Why is that happening? Basically, the market consists of lots of retail traders like myself and I assume all the rest of us here. We're retail traders. We're represented by these little marbles right here. Retail traders cannot move the market. All we can do if retail traders are in the market by themselves, all we can do is cause chop and chaos. We do not move the market. This big marble back here is institutions, and this is what you always hear about, big money they call it, institutions. This is things like places like Goldman Sachs, Morgan Stanley, HSBC, big banks, JP Morgan Chase. It's also 401ks. Lots and lots of companies have 401ks with billions of dollars in them. And then you've got mutual funds, Vanguard, T. Rowe Price, etc. Tons and tons of mutual funds that have billions of dollars. And then you have hedge funds, all of a myriad of hedge funds that are out there all over the place. And then pension funds. So all of those things combined is what actually drives the market, because they have the financial wherewithal to actually move a stock or move an index in the way they want to, especially if a lot of them are doing it at the same time. And that's what our job is as retail traders, is to find out when the institutions are in the trade and follow them. And when they're not in the trade, don't be in there. We don't want to be following the retail traders. So that's what the finding high probability trade setups means. You've got to find when the institutions are actually in the trade. I just wanted to bring up, I use a chatting service. I use the Thinkorswim for my Compass system, and this is TC2000, which I use for my charting and my detailed technical analysis. But what I wanted to show here, this is the SPY as of yesterday, and I think probably everybody knows the SPY hit broke and made a new all-time high yesterday. The market's been trending up here since about November pretty nicely, and we just made a new all-time high in the SPY on Friday, which is pretty dramatic. And it was exactly 2 years ago this month that we hit the previous high. So we've been coming down and coming back up for 2 years to get to new high. So it's been since January of 2022 since we put in the previous high. Now there's the standard candles on the SPY. And this is just kind of an introduction to what a Heiken Ashi candles look like. So you can see the standard candles here. This is the SPY as of yesterday using Heiken Ashi candles. And you notice that, you see how the gaps right here, you don't see gaps on Heiken Ashi candles because the way he constructed, and I'll go over this in details, but I just want you to see that these are Heiken candles, and you notice when they're in trends, you get, on the upward trend, you just get flat bottoms. In the downward trend, you get flat tops. There's no tails on these and no wicks on these. And this is yesterday's candle right here. And when we get into Heiken candles, one of the things I'm going to be pointing out is what's called Heiken reversals. That's what you look for to enter trades, Heiken reversals. And Heiken reversals occur when you get wicks and tails on a candle like this, or especially if you're getting a Heiken reversals. On the bullish side, you're going to have flat tops. And then you get dojis, or basically wicks and tails, which we consider dojis. And then when you get a bullish candle like this is a bullish Heiken reversal. You're going from a tail on this candle, to a flat bottom on this candle. That's a bullish Heiken reversal candle, and that identifies normally at the beginning at least of a short-term uptrend. And you can see right here, we have you see this wick and a tail here. You see the flat bottom on that, and then flat bottoms all the way up. That's a Heiken reversal to the bullish side. All right, and I'll get into details of this, but I just wanted to point that out before we get started. All right, so rules to trade by. This is the rules I follow in the room. We trade the best and we skip the rest. We only trade the very best high probability trades we can find. They give us the most likelihood of being able to make money. I mean, that's there's no reason not to do that. Second, and this kind of sometimes surprises traders, our objective is not to make trades. Our objective is to make money. When in the room, that's what we're focused on. We're not focusing on how many trades we make. And I get a lot of questions from people all the time in the room, and also who want to take the alert service. How many alerts do you put out in a week? I have no idea how many alerts I'm going to put out in a week. How many high probability trades that meet that criteria will there be? I don't know. I have to take them as they come. So that's a key thing here. Our objective is not to make trades, and your objective as a trader should be to make money, not to make trades. And so that's what we follow in the room. And also, we need an edge here. And here's our edge. Our edges right now is we use what's called the right line compass system, which I'll go over with you. This particular system identifies when institutions are in trades and when they're not, both on the 5 minutes on the chart and the daily chart. And we also trade relative strength and relative weakness, which means we're trading a stock long if it's outperforming the S&P 500 that day, that's SPY. So we compare the stock that we're looking at to the SPY. And if the SPY is going flat and the stock's moving up, then it's got relative strength. If the SPY is flat and the stock's going down, it's got relative weakness. The SPY can be moving up in this stock, and this stock can be going up at a faster pace than the SPY. So that's relative strength and relative weakness. It's another big edge for us. Trading with the market trend. And market is very, very important. I think a lot of people don't understand that what the market's doing drives so many of the trades, so many stocks. 75, 80% of the stocks trade with the market. So when you trade with the market trend, if there is one, you've automatically increased your likelihood of being profitable on a trade. If you've got a trending day in the market, and it's a bullish day like yesterday was, and you're trying to trade short, you're at a disadvantage. You can still make money on trading some shorts, but you're at a disadvantage because the market is pushing up. So you're much better off to take stocks that have relative strength and are trading with the market. And the fourth thing here is to buy near support and sell near resistance. In other words, don't be chasing stocks. And we go over this every morning in the room. You get these stocks that come out of the gate flying higher. People get FOMO, the fear of missing out. They jump into the trade, and the next thing you know, it reverses on them and heads back. And now they're stuck in at a higher price. We typically want to wait for that stock when it's going too fast to come back to a support level, and enter at that support level. So we're getting in at a better price. So those are the edges that we have that we use. And basically, all we need is edges to be better than the other retail traders. We are not, as traders, not as retail traders, we're not going to beat the institutions. Anybody who thinks they're going to beat the institutions is going to lose a lot of money. We just want to follow what the institutions are doing basically let them show us which way to go and follow them. All right. Then again, I want to cover the Compass system briefly here. This is a piece of software that I use. It identifies the highest probability trade setups and sidesteps setups that look good but are going to fail more often than succeed. And basically what we're doing, we're just looking to see when institutions are going to trade and when they're not. And that's exactly what this says here. In the Compass system, analyzes complex trading data and displays the results in an easy identifiable visual format. And we'll see a lot of these. We'll see a lot of these charts today as we move forward. And again, I really like the visual element of the Compass system because it makes it possible for even new traders to find high probability trades and know when the institutions are trading and when they're not, without having to have a tremendous expertise in technical analysis. So that's a big advantage for newer traders. So again, this is getting an edge. This is kind of a repeat though, but who and what are the institutional traders? So our edge is we only trade trades that are being driven by the institutions, and I explained who they were. We only take stocks that have relative strength or weakness versus the SPY or the Qs. You can use the Qs if you're trading some of the tech stocks. And again, trading in the direction of the overall market, and that's how that gives us an edge. We're going to be trading stocks that are supported by institutional buying and selling. We're going to be in stocks that are outperforming the SPY, and we're going to be trading stocks that are moving in the overall direction of the market. This sounds really simple, but you know, trading relative strength and relative weakness, a lot of people don't understand how important that is. And these are the things that give us a big edge over the other retail traders. And these are the kind of stocks that we pick in the room, for the alert service. All right, so basically this is a little funnel that I did. I did a video on this, but this is kind of when you funnel the stock through this, how many of these does it meet? And when they come out the bottom, those are the ones that you can get in. So basically you want a critical thing. You want the daily and 5-minute chart to align. If you're getting into a stock long, you want the 5-minute chart to be bullish and you want the daily chart to be bullish. You want both of those things to be aligned up. Then we're going to trade with the trend. The trend should be, if the stock is a bullish trend on the daily and the market is trending up, obviously you're going to trade it long. You'd like to trade in the trend with both the stock's trend and the market trends. Then we have the Compass indicators, the line. Is this movement that's taking place being driven by institutions? If it's not, we're going to pass. I'm not going to get into a trade that doesn't have institutions in there because the retail traders are trading it, which means it can easily reverse on me. And then relative strength and relative weakness, another key element. And then is the stock near support or near resistance? If it is, you can take the trade. If it's not, you can put an alert and take the trade when it gets to support or resistance. Resistance would be for going short, of course. The stock moves up, hits resistance, turns around, heads back, then you get out. So then you get in. So this is basically I just try to simplify the process of what to do to find these trades. All right, so this is the funnel method for the highest probability trade setups. And I'm going into a lot of detail on this because I want you to understand where these trades that we're going to see are coming from, how we're finding these. Again, we got to identify the market trend for the day, if there is one, and trade in that direction. This is important. The market is, you really want to be trading with the market if there's a market trend. You want the stock traded to have daily and 5-minute chart aligned. We covered that. Compass system needs to align so that we know the institutions are in there. Stock should have relative strength and relative weakness. On a 5-minute chart, if you're trading long, the stock price should be above the VWAP for longs and below the VWAP for shorts. This is the volume weighted average price is one of the things that institutions use a lot to enter trades and exit trades. So you want to trade above them for longs and below them for shorts. If you like a stock long and it's below the VWAP, wait for it to break up above the VWAP and then get in. And again, you want to enter a trade near confirmed support for long and confirmed resistance for short. And when you enter a trade, there should be no nearby support or resistance on the daily chart to limit the profit target. And this is really comes down to technical analysis. If the stock, you like a stock long, but you're looking at the daily chart and it's 10 cents away from the 200-day moving average, you don't want to be taking the trade. If it doesn't have enough room, you want to wait for it to break through the 200. If it does, and trade it after that. So again, these are the keys. And if you break it down simply like this, it's really not that complicated. When you go through trying to find these high probability trade setups, it's stunning to me some of the trades that people take. And I look at the chart and I see it, and I'm just flabbergasted by what in the world they see to try to take this trade. I mean, it looks like a disaster. And the other thing here is have patience. This is really, really, really important. This is probably the weakest point for most traders. When they're sitting in front of their machine, they feel like they need to be clicking the mouse and getting into trades. You've got to have patience. You've got to wait for the stocks that are high probability to come to you. You got to wait for the market to set up a direction so you know what's going on. So that's the funnel method, and that's how I find the highest probability trade setups. Now, the strategies that we use in my Compass options room and on the alert service, this basically are what we use. Straight calls and puts, obviously. And now I will say that when I call out a trade or I send a trade out an alert, you don't have to take options. You can just trade the stock. But I basically trade options because I can leverage my trading with doing options. So we do a lot of straight calls and puts. We just put a calls on Gilead yesterday. I do debit spreads using weekly options expiration. This is interesting. I don't use debit spreads going out 2, 3, 4 weeks in time. I use them using the current weekly expiration, and I have a video on why I do this and how I found out that this was a much better ROI than going out in time. I also do what's called time spreads over earnings. They're calendar spreads. This is a non-directional trade. We're just trying to catch volatility crush after the earnings comes out. You probably, if you're aware of options, you know that the premium in the options when earnings are going to be coming out, they jack them up they crank up the volatility on them to raise how much it costs to get puts and calls, because they don't know which way the stock's going to go off their earnings, and they don't know how much it's going to go. So they raise the volatility, raising the price of the options to take advantage of that, so they protect themselves. What our job here is to do is when the earnings come out, we're actually using a calendar spread by selling this week's and buying next week's, and we do that so that when the earnings comes out, we catch the volatility crush. I also have what's called a weekly at the money strategy to capture premium. This is basically a strategy where we sell puts week after week after week against a stock that we're holding a longer term put down below. Like we might be selling $100 puts, and we have a $95 put 2 months out in the future to create a spread for us. So we just keep selling puts every week against it to bring in premium. This would be a neutral to bullish setup on the stock. And then we do credit spreads to capture premium. Most people probably are aware of what credit spreads are, but we do credit spreads. We just finished one on Meta this week. We collected $50 credit for each contract we wrote. 4 days later, we closed it for $10 debit. So we made 80% of the max profit on that in just a few days. And the super system, this is just very high probability trades to catch SPY moves. These I only call out in the room because they're much too quick to send out alerts. Okay, so let's talk about the Compass Options Alert Service. Again, it's designed for day trades and short-term swing trades. That's all we do. This is not an investment service. It's designed for traders who can't watch the market all day, or don't want to watch the market all day. I do it all day long, so I'm watching it constantly. You're going to get real-time alerts on the highest probability trade setups that we just talked about, how we find those, and the highest probability trades by identifying institutional involvement. This is the key. If the institutional involvement, the market internals, or the market direction basically is lined up as well, and then I do some fairly detailed technical analysis to find the best of the best. I may have 5 or 6 stocks that have high probability that I'll go ahead and look at the technicals on them to get the very best of those. All right, and this is just a P&L from the last 90 days. This is actually off of my trading account. I forget back to January, but we do pretty well. That's the kind of P&L you want, moving from bottom left, upper right. And I'm just going to cover some results here. Now, I just want you to see what the system is producing, what my methodology is producing here. I'm not going to spend a lot of time on this, but again, this was I just put this in. I did this quite a long time ago. This was March through June 23rd of 2023. These are the wins and losses we had those months. Win rate between 86 and 87.5%. You know, we were trading about 40 trades. We've cut back on that quite a bit because the market was churning a lot. But this was the win rate we had. These was the profits we made each month for the trades we took in the room. And you can see there's variations. Obviously, some if the market's with you, you can stay in trades longer. If you get a stock that you take that you get bad news that comes out and it tanks, you take a bigger loss. So these are going to vary, but you can see we're fairly consistent. And I'm just going to run quickly through the trades that I take. The reason I show this is not to really brag about the wins or anything. I kind of want you to see what the average percentage wins that we take is. I don't want people to think Linda, you're going to talk on candles. Yeah, I've got a whole, as soon as I get through this, I'm going to go directly into Heiken Ashi candles. And that's going to, I'm going to spend quite a bit of time on those. But I want people to be aware of how we use those and what produces those things. So these are basically roughly, these are the percentage that we made in the trades that we took in September. And I don't want people to think I'm going to say 4 or 5, 6, 7, 800% on trades. We don't do that. We're making 15, 20, 25, 30, 35, 40% on the trades we take, and we have losers. Everybody has losers, we have losers. So that was September. And you're going to see very similar results here. We did 7,700 in September. October, again, very similar, 20%, 19%, 24%. Nothing huge here. You don't see any 300% winners. And there's the November trades, same kind of situation, very, very similar. $5,100 in November. December, we took very few trades in December, 14 and 2. But again, 87% win rate is pretty close to what we do month after month. And these are the ones in January so far that we've taken in the room and alerted out on. Okay, so I just want you to be aware of that. So these are what our wins were. All right, and these are some of these specific. So these are specifically trades that we sent out on alerts, and you know you can see what they are. I just like to show. I use a baseline of $2,000 and invested in each trade, and you can see what they did. This was a real good one, 50%, but most of them again they fall 16%, 30%, 38%, and these are the most recent trades. This is just from this month that we've just done, and we just closed out a lot of these. Workday yesterday, we closed out Meta yesterday. So again, in for 1170, out for 1470, 26% profit, and 2,000 invested in each one is producing nice results for January. And this was the overall results in 2023. I just want everybody to be aware of what you can expect, what you look for. You're not going to be making $1 million, but in 2023, the trade results using $2,000 per trade, investing $2,000 in each trade, taking the Compass option room produced a profit of $60,000 basically. So if you use an account of $50,000, I don't know what anybody has, but this is I'm using as a baseline. When you started out, each trade used 4% of the account balance to get into each trade. The growth, we produced 120% return over the year. So the 50,000 went to 110. And at the end of the year, putting $2,000 into a trade basically was less than 2% of your total account balance at that time. Okay, and this is just an overview on the alerts that you'll get, what they're going to look like. They obviously we're trading the best, skipping the rest. You're going to get an alert with the stock symbol, the option strike price, the option expiration date, and the price to pay for the option. That could be a range. You know, it could be $1 to $1.05, or 85 cents to 90 cents, something like that. And then you'll get within that trade, that alert, you get the sell price, but generally you're going to get a separate alert with the sell price, because what I like to do is watch price action before I determine where we want to try to exit. All right, so those are the alerts that you're going to get. And again, how do we get these stunning results? We do this by using institutional trading. The institutional traders in there. John, you're asking, do more trades in the room than you send out an alert, alarms? Yes. How many more on average? You know, I'd say I take more trades in the room than I send out in alerts, because if I anticipate the trade's going to be fairly quick, and when I say fairly quick, you know, an hour, an hour and a half or less, then I'm generally not going to send those out in an alert, because it's not fair to the alert members if a trade's going to be that quick, because they don't have, some of them may, you know, they may get it too late, or they may not be around for the exit. So I don't take every single trade on the alerts, because it's not fair to them. But I would say, how many trades in the room versus how many on the alert service? I don't know, I'd say the alert service probably gets 2/3 of what we send out, half to 2/3 of what I take in the room. All right, so again, this is how we achieve these stunning results. We look at when institutions are driving a trade, and when the market's moving in a direction, if they're heavily bullish or bearish, and we only take trades when these are all in our favor. Basically, the compass system needs to tell us the institutions are in there, and we need to have relative strength, relative weakness on the stock. And I'll skip past that. This just tells me how we do this. And this is actually how the compass system finds whether institutions are in there or not. This is the calculations it goes through. It's doing a triple screen assessment. That's a fancy way of saying multiple time frames. It's looking at three things. It's looking at momentum, current time frame, multiple time frames, trend, current time frame, multiple time frames, money flow, current time frame, multiple time frames. If you've got a stock that's bullish on all three of these across all the three different time frames, the chances of a stock not having institutions driving it is pretty low. Most likely, if these all line up across multiple time frames, it's the institutions that are driving the trade. And then especially if you have relative strength and relative weakness to go along with that. All right, so I'm gonna before I get into any charts of the trades that we've taken, I'm gonna go into the Heiken Ashi and how I use Heiken Ashi candles and what's called Heiken Ashi reversals. All right, so this is just a chart that I want to show what Heiken Ashi candles look like. This is Tesla. This is a trade we took a while back, but I just kind of want to show you what Heiken Ashi candles look like and what the compass system looks like. The compass system is when it's telling us we've got green like this. This is a multi-time frame momentum. This is the current time frame momentum. To me, these are the two most critical things. They need to be green or blue for bullish and red or yellow for bearish. So you can see here that it's green across the board. So the compass system is telling us with all of this green that the institutions are buying Tesla right here. So these are Heiken Ashi candles, and you see right here, you see a wick and a tail, and then you see a flat bottom. And this is where we actually get into the trade. You see the flat bottoms on these candlesticks. You see how easy it is to identify the trend that's developed here by using Heiken Ashi candles. Standard candles won't look like that. And then if you're in the trade and you want to take profits, notice here, now you're starting to get tails. When you get tails instead of flat bottoms, your momentum is waning, and that's where you would get out. Unless you were, going to swing it for a longer term, but that's a 5-minute chart, so that would be an intraday trade. All right, so that's Tesla. All right, so let's talk about Heiken Ashi candles. And Heiken Ashi actually means average candle. It's a Japanese term. It comes from the fact that the Heiken Ashi candles, to get one candle, you need two. It takes the value of two different candlesticks, two candlesticks together to create the Heiken Ashi candle. And what's the advantages over standard candlesticks? First of all, it identifies confirmation of trend reversals, and this is the biggest one that I use, because when I'm waiting to get into a trade, if I'm looking to enter, for example, it comes down and touches support, and I'm looking to enter when it gets ready to move to the other direction, back up again, then I'm looking for Heiken Ashi candle to give me the confirmation that the reversal is confirmed. And it's much easier to see that with Heiken Ashi candles than it is with standard candles. It allows you to trade entries on a confirmed reversal, avoiding failed breakouts. This is a big one. A lot of times, folks, when they see a reversal on a regular candle, they'll jump into the trade, sometimes even before the candle closes, and it'll reverse and head back down again. by taking confirmations reversals from Heiken and Ashi setups, you got a much better chance of the failed breakouts not occurring. You'll skip a lot of failed breakouts. It smooths out the price movement to eliminate noise. This is, regular candles, they jump around a lot. You get a lot of up and down on the candles. You can see on those Heiken and Ashi candles, I showed you that it's taking the noise out of the candlestick presentation, and allows traders to stay in trends longer, avoiding shakeouts. In other words, you're not going to get shaken out by some little dip on one candle when the Heiken and Ashi candle is still telling you that the trend is to the upside or to the downside. And again, it smooths out the price movement to eliminate noise, and identifies when a trend is waning, so that you can exit for profits when the trend is ending. The Heiken and Ashi candles will show you that, and then you can exit the trade. A lot of times, what I'll do if I'm getting ready to exit a trade, I'll switch from Heiken and Ashi back to regular candles, because a lot of times you can catch the reversal or the waning momentum. You can catch that faster with regular candles than with Heiken and Ashis. Not faster necessarily, but the Heiken and Ashi, since it takes 2 candles to create that reversal to the downside, you might have been able to catch it on the first candle. So that's when I'm actually ready to take profits, and I'm nearing there. And again, it makes it much easier to visualize the current trend. As this shows you right here, much easier to visualize a trend on Heiken and Ashi candles than it is on standard candles. All right, so that's what Heiken and Ashi candles will do for you as far as your trading is concerned. Now, this is just some blurbs I put out. I did this in Reddit, and I also did this video on this. But if you haven't used them, you might want to try building them into your technical analysis to align them. Again, it means average bar in Japanese. This is the same things we went over here. Smooths out the price action, so you can identify trends and reversals much more clearly, since it eliminates a lot of noise. Now, bullish Heiken and Ashi candles, and I'm going to show you these. Bullish Heiken and Ashi candles have flat bottoms. They always have flat bottoms. And bearish Heiken and Ashi candles have flat tops. That's how it's easy to identify those. The bullish trends, we're going to have flat bottomed Heiken and Ashi candles one after another, and bearish trends will have flat topped Heiken and Ashi candles one after another. You'll see them stacking up, as we did back on the Tesla example. Generally, you can stay with a bullish trend as long as no flat topped Heiken and Ashi candles appear, indicating a lull or reversal in the trend. You'd go from a flat bottom to a flat top. When you get a flat top candle, that's generally the beginning of a reversal to the downside. And again, the reversal in the bullish trend, this is what I'm going to show you the candles, but I just want to go over the logic that we use. Reversal in a bullish trend is going to have a flat bottom Heiken and Ashi candle, which is bullish, followed by smaller doji candles. We'll have wicks and tails, followed by a flat topped bearish Heiken and Ashi candle. That's showing you the reversal, and I'm going to show you a bunch of these. Again, the doji candles indicate momentum is slowing, and it's time to be prepared to take profits when a bearish Heiken and Ashi candle appears. One thing to keep in mind, this is a little bit more nuanced. If the trend that is ending had many long bullish Heiken and Ashi candles, big long candles, the reversal is going to require a long bearish candle to actually confirm that it's reversed. In other words, if you get a lot of green candles that are long Heiken and Ashi candles, and then you get a little bitty red candle, that's not enough to confirm a reversal in the trend, because it's not enough power to the downside to take out that upside momentum, and a lot of times it'll reverse right back up again. One thing to be aware of is the price on the stock when you have an Heiken and Ashi candle chart up does actually not reflect the actual price. The price is going to be based on the 2 candles together, so you need to always look at your stock price based on a regular chart or in your trading portfolio for what the price actually is. It doesn't vary a lot, but it can be off by several pennies. And again, there's other nuances to using Heiken and Ashi candles. But again, try looking at some of these charts with Heiken and Ashi candles and see what you think about them. I think you're going to find these things are a big advantage. And again, my win rate with Heiken Ashi is generally on those, it's about 87 to 90%. And again, the reversal is identified, and this is when I'm trading reversals. Reversal is identified after the current Heiken Ashi candle closes, whatever time frame you want to be using. So make sure the candle, the current 5-minute or the current daily candle, whatever candle you're looking at, make sure that the candle has closed. You're not in the middle of a time right then. And again, this is if you have a valid Heiken Ashi, the first thing that needs to be true is the Heiken Ashi candle height has to be at least as large than the prior candles that occurred. And that's what we've just talked about. You want these candles to look, when you get small candles, they don't have the power that the big candles do. So if you've got a big trend going with big candles, the trend to the reverse needs big candles as well, large, taller candles. And we've covered this. Obviously, we want to take the trade in the direction of the market trend, check for any nearby support or resistance levels that will cut down on your profitability, or the potential profitability on the trade. And again, we should take them with stocks with relative strength and relative weaknesses. And again, we need to have institutions in the trade when we lean on a Heiken Ashi reversal. We don't want to do that if the institutions aren't actually creating this reversal. So that's really important, and that's what I use the compass system for. All right, and this is just, let me just show you, these are Heiken Ashi candles, and when you're looking at a Heiken Ashi candle, when it goes from candle to candle, the next candle is always going to start at the halfway point of the previous candle. See how this candle started right here at the halfway point, started at the halfway point. Each candle starts at the halfway point of the previous candle. Now this is a Heiken Ashi reversal, a bearish Heiken Ashi reversal. You notice you've got wicks and tails, flat top. A flat top is a bearish candle. All right, so this is a bearish reversal. This is actually a continuation to the downside in a downtrend that's already been occurring. All right, so if you were short here, you wouldn't get out here because you don't have a flat bottom candle yet, and then you went right back to flat top again. So this is basically somewhat of a compression followed by a continuation of the downward trend. Now over here, you see we're getting wicks and tails, and we're getting a reversal here taking place. But where would you actually take a trade bullish on this? Well, you wait for the wicks and tails to go to a flat bottom like that. This right here, this candle right here, is a Heiken Ashi reversal to the bullish side, right on that candle right there. That's where you would enter a bullish trade right there, and you notice that you get flat bottom, flat bottom, flat bottom, flat bottom. It moves up with flat bottom candles. All right, so that's the Heiken Ashi setup, and that's what you look for on Heiken Ashi candles, and that's what you can use to enter a trade. All right, so again, this is Tesla again. I'm going to move along to some other ones. This is Tesla. I just showed you. This was Gilead. Now I'm going to show you Gilead. Gilead we took yesterday. All right, we took a swing trade on this. Basically, we're still in the trade. Now you see that I've got the compass system up here, and I've got Heiken Ashi candles displayed here. Now right here, you see we had this kind of like a hammer. But that's basically a reversal getting ready to take place. We had a tail here, a tiny little tail here, and then we get a flat bottom right here. All right, so this is actually where I entered the trade. Now we had a little bit of a tail here, but nothing would be concerning. And then we got a flat bottom here. So we entered this trade we entered it here, assuming we're going to take it overnight, and I'll show you why we decided to do that. So again, everything's green here. The institutions are buying. That looks like a nice Heiken Ashi reversal right there. And you see it moved up pretty nicely during the day. And we actually tried to take profits at the end. I think some of us got filled right at the end of the day of this. But if I was intraday trading this, I would have got out right here, because you see how I got a flat top candle here? I got a lot of big candles, and then the candles get small, and a flat top candle here. But I was basically swinging this into the future, and I'll show you why. So this is a 5-minute Gilead. That's where we entered. That's the Heiken Ashi candle that we entered on right there. Now this is Gilead on a daily. This is a Gilead daily trade. So here's yesterday's candle on Gilead on the daily chart. This is a Heiken Ashi setup. All right, this candle here had a wick and a tail on it. It was actually a reversal back here, but I didn't sketch it. But this is a Heiken Ashi reversal right here. We had a wick on Thursday and a flat bottom on Friday. That tells me that the trade could be entered long as a swing trade. And then we just looked yesterday to, once we knew we were going to take it as a swing, we looked on the 5-minute chart to make a determination of where we wanted to actually get into the trade. All right, so that's the Heiken Ashi reversals. All right, now I'm going to drop the actual slides here for a minute, and I want to go to some regular trades. And this is Gilead right here. This is a daily. This is the one we just looked at off the compass system. All right, and again, there's a daily there. We saw the 5-minute just a minute ago. I'm also going to look at Spotify. This is one we took on 118. I'm going to switch back to 118 on a 5-minute chart. All right, so this is 118 right back here. And we actually took that at 9:50 in the morning. All right, so let's see, is this the 18th? Bear with me just a second. Doing these live charts is a little more difficult. That's Friday. All right, so this is where we took the trade. All right, so we took it at 9:50. Right, you see the flat bottom, and a wick and a tail. We were looking for a place to get into this. And this is a flat bottom candle right here. This is a Heiken Ashi reversal candle on Spotify on Thursday. This is where we took the Thursday trade. Right here. And notice something here. This is a 5-minute chart. Notice that I took it when it broke through this VWAP. This VWAP is this pink line. When the stock broke through the volume weighted average price is when I took the trade in Spotify. And we actually get out the same day on Spotify. And you can see what a nice, how the Heiken Ashi candles is telling us what a nice move up we had here in this setup. And notice what happened here. Reverse back down. We took profits in Spotify. We took it pretty quick. Took a pretty quick profit on that, but that was a nice trade. So that's what we did on Spotify here. And let me switch over to the daily chart briefly. And this is where we took the trade on this day on Thursday. See the Heiken Ashi reversal right here. Tail on the candle, flat bottom. And this shaded area right here is called the dynamic compression zone. On the daily, we're looking for it to break out of a dynamic compression zone on Heiken Ashi reversal. So that's what we took that. All right, I'm going to show some of the other ones. This is how it looks on Compass, so I know that the institutions are in there. But let me show you. This is TC2000, and I've got some here, and it's a little bit easy to see in here because there's not so much. It's not so busy. But let's take a look at Meta, for example, on the daily chart. Right, this is Meta on the daily chart right here. All right, so this was taken on 1/8, July 8th of January, and this is it right here. If you see the Heiken Ashi reversal right there, it goes from a wick and a tail, even though it gapped up, still had a tail on it. Right here, we took Meta. We took the credit spread on it. We took 2 trades in this thing, and again, that's standard candles. Let's look at Heiken Ashi candles on it. Right, and go back to the 8th. See the reversal right there? Flat bottom after a little wick and a tail here. See these candles get big, they get small, and then they move up again. And here's your nice move up in Meta. And again, we're getting another reversal here on Thursday on Meta. So I just want you to be able to see that. Let me see if there's any questions out here. Let's see, Doug. Doug, what's the difference between the compass system and the dominator? Yeah, the compass system is looking for, it's basically looking for information to tell us if institutions are in the trade or not. The dominator system simply identifies market internals. It's looking for the number of stocks moving up and up volume and up ticks, and versus the number of stocks moving down on down volume and down ticks. It doesn't tell you anything about whether there's institutions in there or not. I mean, it can help, but it's not telling you whether institutions are in there, because it doesn't really tell you what kind of price moves you're getting. It just tells you the number. Is the Compass system available for TradingView? No, Compass system works on Thinkorswim or NinjaTrader. It'll go on NinjaTrader and it'll go on Thinkorswim. I have it on Thinkorswim. I prefer it on Thinkorswim, but it will run on Ninja 8. Vernon, all you see is my cursor? That's weird. Perhaps I haven't, maybe I need to share the screen again. Hold on a second. Is anybody else having that problem? I don't think you trade regular Japanese, what's this? I don't think you trade regular Japanese candles because they say the exact same thing. But the presentation of Heiken Ashi candles smooths out all the noise. Regular Japanese candles, and I use them. I use a regular 5-minute and daily Japanese candles, but Heiken Ashi smooths out the looks of those candles on your chart. Would I use the Heiken Ashi candles in the SPY chart to determine trend? Yeah, sure. I mean, I showed that just a little earlier on the SPY. And here's a Heiken Ashi reversal yesterday in the SPY. See, we had a Heiken Ashi reversal right here on the SPY. You see how smooth that went up? And here we had a Heiken Ashi reversal yesterday. And if I switch over to regular candles, you can see you don't have as smooth a look with Heiken Ashi as you with regular as you do with Heiken Ashi candles. Can everybody see my screen okay? Somebody said they only just saw my cursor. All right. All good. Okay, thank you. Does the candle have to close to prove it's a Heiken Ashi? That's a really good question, Thomas. Yes, it does. But here's the thing. Once a Heiken Ashi candle starts to develop, in other words, once you look at a candle that's developing on a 5-minute chart or on a daily chart, the likelihood, and once you get a flat bottom or a flat top, the likelihood of that particular candle not following through with a flat bottom or flat top is extremely low. Most of the time, once the Heiken Ashi candle starts to form, it's gonna stay with a flat top or a flat bottom when it closes. At least 90% of the time, probably more. What's the typical number of trades I may be in at one time? In other words, how many $2,000 needed at one time? And remember, Harron, I'm just using 2,000 as a baseline. Obviously, everybody's account balance is different. And listen, I trade some trades depending on what the market's doing. If I've got a trending day in the market, I'm going to put more money into trades than if I get a choppy day. But I'm just using that as a baseline. But the most number of trades I usually have on that if we're in the room is generally around 5 at the most. Usually less than that. Usually 3 or 4. We closed out 3 or 4 yesterday, but very, very rarely more than 5 trades. First of all, they become difficult to manage. The only time it would be more is if I've got put credit spreads on. But put credit spreads don't require as much management as regular trades do. But I could have some of those on. So and again, it's up to each trader to it's up to everybody's risk how much you want to put into a trade. Obviously, I mean, I used to use 2,000 because I just use that as a round number to look at that. Some people in the room trade, trade 500, some trade 10,000. I mean, it just depends. I have used modified HA for 20 years and never noticed the flat tops and bottoms. Okay, Richard, listen, the flat tops and flat bottoms is what distinguishes bullish and bearishness, and how to find a reversal. You really need to get those reversals to get into a trade. That's the whole point. Is if you're looking to enter a trade, you're waiting for it to come down to a support level. The Heiken Ashi reversal is giving you a confirmation that the original trend has been joined again. On the daily, you don't know it's a flat bottom candle. The day is over. And again, this goes right back to the 5-minute candle. When this candle formed yesterday, by lunchtime or so, it's got a flat bottom. The likelihood of that not ending up as a flat bottom candle is extremely low. So basically, if you're looking on a daily chart, for example, if let's say you're looking at 2 o'clock, 2:30 in the afternoon, and you're looking to take, for example, a trade overnight that's got a Heiken Ashi reversal candle, you can assume by about 2 o'clock that Heiken Ashi candle, if it's got a flat bottom and it's a reversal like that, that you can go long. Is there any updates to the compass system? You've been using it since the end of 2022. Nothing major. The only thing you would get if you have the compass system, you want to check with Rightline, because I've added some scans, some additional scans that you have access to, and you should be able to get that. And you should also have all the videos, because I produced an awful lot of videos on the strategies that we use, the Heiken Ashi candles, the compass system indicators, and how to use them. All right. Okay, cool. The red candlestick before the last 2 green candles is a reversal. Yeah, generally the red, you probably notice on my chart here, my TC2000 chart, I don't have just green and red. I have different colors. And they tell me something. When I get a candle that's outlined in blue like this tells me that the Bollinger Bands are expanding, which means we're coming out of compression, which gives me a higher confidence in the trade. I get a higher confidence in a reversal trade if the candle is blue, or if it's pink to the downside, because it tells me that there's a compression break taking place by looking at the Bollinger Bands. That's all. This chart before the SPY chart. I'm not sure which one I had before the SPY chart. Let me see. It might have been Spotify, was it? Don't know. You're talking about if this was a reversal, perhaps? This would be a Heiken Ashi reversal to the bearish side. But you remember one thing: if I switch over to the regular chart on this, if you're looking at a chart like this in Spotify, there should be no way in the world that you're going to take this thing short, because this technicals on this white line I've got on here is the 8 exponential moving average. There's no way I'm taking a stock short when the 8 is moving up and the stock price is above it, and it's above all the moving averages. So when I see something like that with a Heiken Ashi reversal to the bearish side, I'm not interested in it. It's not a stock that I'm going to trade short. Screen's fine. Thank you, everybody. I appreciate that. Yeah, that's this. Sarah asked about the different colored candles. Yeah, I color code my candles with TC2000 to identify when Bollinger Bands are expanding. I used to have Bollinger Bands on the chart. It made it way too busy. So TC2000 allows you to color code them, and they tell me that I know when I'm getting a blue that I'm getting a compression breakout. It basically gives me much more confidence in the candles if they're colored blue as opposed to colored green or pink for the short side. I just look for flat bottoms, flat top bottoms of flat tops and candles. If you have a flat bottom candle, flat bottom red candle followed by a flat bottom green, the stock goes up. Yeah, but that'd be true. I mean, you can have a flat bottom red candle. It's kind of rare, but you can have one. And if it goes to green, it just tells you the stock's moving up. But you've got 2 flat bottom candles. That's bullish. You're guessing since premiums do not round to 2,000, I expect you're using the percentage rate or return on trades and applying it. Yeah, the way I do this is if we take a trade that's let's say it's $1,400 for a contract, I just take one contract. In other words, I divide what we're paying for it into 2,000, and then I drop off any if it comes in like 2.7 or 2.6, I just take 2. I'm trying to be conservative with that. If one is trading on futures on Ninja, is one fine trading on futures, say within Q, is the Compass available? Yes, the Compass system is available for, it's gonna give you information on any particular stock that you take or index that you take. I mean, you know, if you're trading gold or you're trading NQ or you're trading oil, as long as you can put the code, the symbol into the platform you're on, whether it's Ninja or whether it's TOS, then you can, Compass is going to give you that information. Where do we get this shared scanners such as cascading up? This is for TOS. Yeah, Brian, you just need to contact Rightline and ask them for the scans, and they'll just send them to you. Dr. Rory or Dr. Sergio, either one, and if you own the system, you get those scans. Does the alert service include access to the trading room? Well, I'll go over the things at the end of the day. If you sign up for the alert service, you get access to the trading room for a month. If you join the trading room, you get access to the alert service all the time. Now you have TOS. How do we get TC2000, Doug? Yeah, it's basically it's made by Warden Brothers. It's a piece of software that you have to buy. You can buy it, you know, quarterly, monthly, annually. I've had it for years and years. If you get it, you want to get the gold package, not the, you don't need the platinum package. The gold package gives you everything that you need. It's a great piece of software for charting. I use it for technicals all the time. I mean, I love to think for technicals. Are you able to get my setups for TC2000? I mean, I can share my screen setup to give you basically what I've got on TC2000 is I've got, let me switch over to regular ones here. I mean, you can see the tabs I've got. There's a 5-minute tab there. This is my daily right here. The main ones I've got is I've got the 200-day moving average is purple, the 100-day moving average is blue, and the 50-day moving average is red here. And this 8 is an 8 exponential moving average, and this orange line is a 15 exponential moving average. That's what I use. I don't use MACD. I don't use RSI. I don't use Fibonacci's. I don't use any of that stuff. You know, I get volume. I need to know volume. Recording, there'll be a recording available, yes. You've noticed in this when two flat bottom candles have equal sized wicks to the upside or downside, then it still works. Now here's something that I just didn't mention when we were talking about Heiken candles. Most people who are used to looking at regular candles, when they see a regular candle with a big wick on it like this, that they think that's a kind of a bearish symbol. That's how you get a shooting star. In other words, the stock shot up here, the buyers came in, and the sellers came in and drove it back down again, just like this, right? But Heiken candles are exactly the opposite. The Heiken candles that have big wicks on them are more bullish than the ones that have smaller wicks on them because of the way that they're structured. All right, let me just run through a couple more charts here so we can get a good feel in case you have any more questions on Heiken candles. I just picked out some stocks that I wanted to show you. Here's Dell here. Again, easy to see. I mean, notice when you're looking at the Heiken. All right, here's a bullish candle, Heiken reversal, right? Flat top. Notice how it trends down beautifully here. And over here we switch, we get small candles, and then we get a Heiken reversal here to the upside, and it marches up, and then it gives you a little bit of a hesitation. Now remember, I said when you've got big candles, you don't get out on one little candle, and then it continued up again, and then you've got little candles, and now it's heading back down. You're out. Heiken reversal right here to the upside, and we get another Heiken candle yesterday on Dell. Gilead we've looked at. Again, I've got a few in here that I wanted to show. WCN. This is a Heiken reversal on this waist connections here. See how the compression's taking place here? Stock just chopping around. Nothing here to really give you. These candles are too small to take consideration into. But this is a good one. A nice Heiken reversal right here. Volume went up a little bit, and that's a nice Heiken reversal coming out of compression. And you can see how it's colored blue as we break out of compression. Let's see. BCGL. All right, and there's another Heiken Ashi reversal candle. Now this is a beautiful short right here. Okay, let's look at the regular chart on ACGL. Here's ACGL. You can see that this is definitely breaking down here. It broke below the 50-day moving average right here. So look at the Heiken Ashi reversal right here. Wick, flat top, wick and a tail, right? But no reversal yet. Flat top, flat top, flat top, flat top, flat top, couple of small candles. You could have taken profits right there. And then we get another Heiken Ashi reversal to the downside right there. Really easy. You can see the trend, how easy it is to see the trend in these things. Right, and here we got a Heiken Ashi reversal yesterday. We got a lot of Heiken Ashi reversals yesterday because the market was so strong. One or two more, and then we'll just get back into the presentation. There's Dick's Sporting Goods right there with a breakout there, a Heiken Ashi reversal there, but a nice Heiken Ashi reversal right here, right up into that. And this particular one, when it broke out, this is you see this big gap here. If I switch to regular candlesticks, you're going to see a gap where the stock gapped way down. See the big gap down there, and this is a gap fill. And this Heiken Ashi candle was inside that gap fill. All right, so I think hopefully that helps a lot. I don't want to spend too much. I don't want to kill the whole day, and I know you've got your time is important to you, so I want to kind of move along with this. But that's how and you can find these Heiken Ashi candles on the Compass system just as easily. Because you want to know if the institutions are in the trades or not. That's really, really important. These, by the way, on the Compass system, these are the scanners that come with the system. And all I have to do on these things is just click on the symbol, and it pops up in my chat over here. That's a Heiken Ashi presentation, and this is just a candlestick presentation right there. So I can just click on any of these. Yearly highs, NVIDIA, beautiful. TSM, beautiful. It's had earnings. Everything looks great because we've had such a strong period of time. But that's the Compass system. All right, so let me go back to this, and let me go to. I want to make this larger again. So, all right, let me just zip. Sorry to go back through this again, but I wanted you to see the live charts on these things. All right, so there's our Heiken Ashi candles. All right, okay, so now I'm going to look at these are some live charts that I wanted to show you what I was able to Sarah, how many candles with flat tops or bottoms before you take the trade? It depends on the size of the candle. If you get a nice flat top candle or a flat bottom candle for bullish, if you get it and it's a big candle compared to perhaps the candles that had come previous to that, you take it right at the end of that candle. You don't have to wait. All right, so these are standard candles, and these are just some trades we took in the Compass system. This I'm just basically trying to explain why the Compass system works so well to identify institutional trades and how we profited off of those. And basically I've identified some of these trades. But you notice on this here now, remember I told you red and yellow is bearish, blue and green is bullish. You see how this went from yellow to blue right here? So this is where I took this trade, this MDT, and we took a 25% profit in this thing. This was on a swing trade. This is a daily chart, and we took this and we get out right up here, this MDT. This was a nice trade on MDT. This is a VKTX. Again, we were in this for 3 days. Again, Compass system, all green here. Institutions are buying this. They're buying it right here, and we get in on this day, and we get out right here as the stock moved up and flattened out. I had a profit target set already. Again, took a 30% profit in that. McDonald's, this was a real nice one. This was an overnight trade. We get in for 8:30, out for 11:30. So 37% gain on overnight trade of McDonald's. And you can see here, it has this shaded area. That's the dynamic compression zone that Compass system creates. We've also got this pop out of the box symbol that Compass system creates. These are telling you when you're getting that's a bullish pop out of the box signal coming out of compression. And we've got a dynamic compression zone as well. So we took the trade here. We get out the next morning, up $3 a contract, pretty nice gain. Everything is green. The institutions are buying. You notice the institutions were buying here, even though the stock was moving sideways. That's why waiting for breakouts on these things is so important. You don't want to be sitting in this thing for 4 or 5 days waiting for the thing to break, because if you're in options, you're bleeding away some time decay. This was Moderna, nice short right here. This is on the daily chart. Now the pink line I do not use on the daily chart. That's VWAP. I don't use that on daily, only on 5 minutes. But again, this was a nice 33% profit in this. You see, we went from green to yellow. Stock breaks down. We take a short on Moderna. And this was on Amazon. And I'll show you some 5-minute charts here in just a minute. This was a nice 32% profit intraday on Amazon. We just traded it during that day as the stock popped up, and everything went to green here. This was a long-term trend. This was still yellow, but that was okay because I knew it was going to go to green as the stock came down and started to move up again. JD, nice 61% profit. Notice here, green, current time frame momentum bullish, current time frame momentum goes bearish. It's breaking down between this dynamic compression zone. We take the trade, 61% profit on JD short. And Dollar Tree, another one. And this, look at the red on this thing. I mean, you can see that the institutions are selling the heck out of this thing. It's really, the Compass system really, I mean, you can see it on the chart, but this just makes it easy to see. But again, we took 25% right here as the stock came out of this compression right here and broke down. Datadog, another one we took short. We've also had this long recently. This was coming out of a dynamic compression zone to the downside. Everything was yellow or red. Take it short, 21% profit. And this was Crowd, a 20% profit or on the daily chart. This was on earnings here. And you notice it went green and blue. So we took this, and this is just switching back and forth. So it gives you a little concern, but it just kept moving back and forth. But that's the multi-time frame. Current time frames stayed green the whole time. And we took this, and we didn't stay in it very long. We took profits, 20% profit and out. Amazon, this is a 5-minute chart on Amazon. And notice we've got green here across the multi-time frame momentum and current time frame momentum. So this is looking at the 5-minute time. This is looking at the 5, the 15, and the 45, all three of these together. And all of the things are telling us that the institutions are in there buying. We got a pop out of the box signal right here coming out of compression. So we took it long, and we were in it for 45 minutes, and we get out. 32%, pretty nice. ENPH, a nice short. Again, so you can see over and over again where we take these trades, where we find these high probability trades, how the Compass system helps us to find these trades. Again, I could be looking at Heiken Ashi candles on these as well, but I know we've looked at, I think, enough of those. I think that hopefully the presentation I did on the Heiken Ashi candles you found useful. I think it's a great way to enhance your trading. But you see right here, when this broke down, is we actually get in right here in this breakdown. We got a little compression and a breakdown right there. Verizon, this was a beautiful trade. Verizon doesn't move very much, and the options are really, really inexpensive. What happens here on Verizon is we took this and we paid 45 cents for an in-the-money call. I'm in the money put, 45 cents, because they don't cost very much. We stayed at 1 hour, and the 45 cents went to 67 cents, and we took profits. Doesn't sound like a big deal, but I mean, if you took 10 of them, it would have cost, you would have paid $450 for 10 contracts, and you would have got out for $670. You know, if you took 20 contracts, you would have got 100%, a 50% gain on that as well. So that was Verizon, and I looked for these a lot. We had Verizon again the other day that we took long. SPY, this is what I call the SPY super system setup. What we're looking for is we're looking for all red for shorts. All reds are yellow across the board. We're looking for this little red line here is the 15 EMA, and then we got a pop out of the box signal. This is telling us we're getting a compression break when everything is red. The market's been down that day. We're below the VWAP. We take the SPY and we ride it down and then get out. Most of the SPY trades like this are only 3, 4 candles, maybe 5 candles long. Netflix, another one here, 20% profit in this on a 5-minute drop. Again, it's below the VWAP, comes below the VWAP. We go from blue to yellow, take it right here on the pop out of the box signal. We write it down for 20% profit. And Tesla, this was 30%. This is the short side. We took this for the remainder of the day. See, it went from blue to yellow right here. It went from bullish to bearish. Everything else was already bearish. We get a pop out of the box signal. We're below the VWAP. We're breaking below the 15 EMA. We take the trade, and down we go. This is the end of the day. We took it out, 30% profit. All right, and this was a Tesla overnight trade, and this we sometimes I'll take trades overnight based on what the compass system is telling me. You notice we had a pop out of the box signal. Everything was red or yellow. The market was bearish. Tesla was bearish on the daily chart. We took it overnight. It gapped down beautifully. It's always nice to get these gaps. Went from 120 to 112. We get out here. We made about $7 a contract on that. That was a pretty nice trade. And again, there's a Tesla using HA reversal. All right, and this was a QSR chart. I do want to show you. This is what this is a trade we took, and I use it daily in the 5-minute, as I remember I said. They've got to line up. So this was the daily chart right here on QSR. See how bullish it is here? It just went yellow, then blue. We get a bullish candle here, and everything is green here. So this was the 5-minute trade. The 5-minute trade I wanted to take, but this was the daily chart. So then I had QSR on the 5-minute. So my question then is, where do I want to get in this? It's been chopping around all morning. I'm getting a stock riding along the 15 EMA. I'm getting multiple colors here, but I finally go to blue when I've got green across the board, and I get a pop out of the box signal as the stock breaks above the 15 EMA. I take it there, and then I just write it up, just like that. And it was a beautiful entry on QSR. And again, this I just threw this in. This was, and this past April and May, we had 29 wins in a row. I've actually the maximum I've had in the 2 years is I've had 42 wins in a row, and 4 losses in a row is the most number of losses in a row. We have losses. I want to emphasize every trade's not a winner. And again, so here's what we cover, and this is what we take in the room, and we covered this already. Several different strategies we use depending upon what the market's giving us. And there's the alert service. So this is the offer. This is the alert service itself. And again, the alert service sale doesn't end January 11th. The sale is going to end tomorrow, which is the 21st. But you get 50% off if you save 50 on the code when you take the deal. Yeah, all of these offers are in the chat box. You go to the chat box, you can click on them right in there. So again, $7.98 for a full year of the option service, and for a quarter it's $2.96. It comes with we do have a Discord chat room. You'll get access to the Discord chat room all the time. We have 2 other professional traders in there who go over high probability trades. They post charts, a lot of information in there. Of course, you get the alert service, and then you get what they call the wise way to trade options. Those are my videos on so many things, all the strategies, all the alerts, all the indicators on the compass system, as well as things like Heiken Ashi reversals, how to trade, how we trade time spreads on earnings, etc. All that's in there. So that's the compass alert service. This is the actual trading room. If you want to be in the trading room, again, it's say 50. It's $849 for a year, and that includes the text alerts. $849 for a year, $148 for a month, and again, you get access to the Discord room. And the last thing is actually the compass system itself. This is the trading system that I showed here. It goes on either on TOS, Thinkorswim, or onto Ninja Trader. You can get it on either one of those. It's called the Money Flow Tracker on Ninja. But this is, again, 50% off, $12.49 for a whole year for that piece of software, which is really nice. Or you can do it quarterly for $5.98. And again, save 50% for the full year, save $500 for the quarterly. And everybody gets can use it. You can use that compass system to do your own trading. I use it in the room all the time, but most of my members actually have it as well. All right, again, if you have any questions or you would like to learn more, put your name and number or Skype name in the chat box, and I'm going to look at questions over here. I think I've got some more questions. So how can I use the system if I have a full-time day job? pretty much, Thomas, if you're working full time, then I have a lot of people work full time that are on the alert service, and they basically they trade off their phone. You know, if they don't have access to a computer, they just trade off their phone because it's giving you the information you need to get in and get out. The energy level is going away, Brian. I don't use that. It was something I was testing out, and I do not use it. I didn't find it useful. Do I have a minimum open interest volume? Doug, I pay much more attention to the bid-ask spreads on the options. If I've got a pretty tight bid-ask spread, I don't worry too much about the open interest. Generally, the ones that were taken have huge open interest, but if they don't, sometimes I'll do like a debit spread or something like that. And if you look at my video on how to do debit spreads using weekly expirations, it goes into detail of how those can work on fairly illiquid type stocks or options. Is the SPY super system set up for SPY options or stock, or can be used for other stocks? You can use it for anything. You can use it for anything. But the reason I put it in there, Sarah, is because so many people want to trade the SPY. Personally, I think most traders, especially new traders, are better off trading individual stocks as opposed to trading the indexes, the SPYs or the Qs, because when you're trading regular stocks, individual stocks, you have relative strength and relative weakness to lean on. You do not have that. You don't have that ability when you're trading the indexes. The indexes, they are creating the strength and the weakness. So if you take a stock that's stronger than the SPY and all of a sudden the SPY reverses, the stock that you took is not likely to drop as fast as the SPY is dropping because it had relative strength going into the trade. That's why I think trading individual stocks is better. How do I change from a candle to HA on Compass? There's a tab at the top called Style. You just click on Style, and it shows you what it is. Let me just drop this for a second here. Right here it says Style, chart type, candle, Heiken Ashi, just like that. Bro, thanks very much for being here. Appreciate it. And the sale didn't end January 11th. That's just a typo. I used that last time actually, and we decided to extend it for this particular webinar as well. Gene, you heard mention about Heiken Ashi candles, that once you get a flat bottom or top, you can enter the trade. Well, that's where you enter. Now, listen, there's no indicator is 100%, okay? You don't want to trade Heiken Ashi candles by themselves. You've got to take the context of the stock. Is the stock bullish on the daily chart? Is the 5-minute bullish on the daily chart, on the 5-minute chart? Is the stock bullish on the 5-minute? Is it above the VWAP? Is this a good place to take the entry? That's what's important. But if you've got a good entry with let's say you got a bullish daily chart, a bullish 5-minute chart, the stock pulls down to a support level, and then you get a flat bottom candle that's telling you we've got a bullish reversal, a Heiken Ashi bullish reversal, that's when you would enter it, yes. Well, thank you very much. I appreciate it. Appreciate the compliment. Yeah, Doug, is the 1296 annual for Compass locked in for future renewals? Absolutely. You're grandfathered in forever. And will this help you include it? Yeah, I probably shouldn't have. I should have mentioned that the fact that they'll put, if you get the Compass system, they'll put it. Sergio, one of the technicians there, or one of the other technicians will contact you, and they'll actually put the software right on your Thinkorswim platform. You have to have the Thinkorswim platform, or Ninja if you want to put it on Ninja. If you've got the platform, which you can get a Thinkorswim platform, you don't have to actually fund it. And I don't think they may make you put $100 in there. I don't know, but you get the Thinkorswim platform. They will go ahead and install it right on your platform, set it up, and it'll look exactly the same as mine does, and you'll get the scans. Thomas, you're welcome. Appreciate it. I'm glad you enjoyed it. The subscription cost, let me go back. Sorry, I have to keep flipping back and forth here, but here's your subscription cost right here. Alert service, $7.98 for a year. If you put in, say, 50%, $2.96 for a quarter. Comes with a Discord room. You get 1 month in my room. That's the alert service. Here's the live trading room. Again, put in, say, 50%. It's a year for $849. And again, we made $60,000 last year on $2,000 in the trade. To me, that seems like a pretty good investment. And monthly, just $148. And that's for the actually room. And here's the Compass system itself, the actual software that either goes on TOS or onto your Ninja platform. $1249 for a year. Again, that saves 50%. Quarterly, $598. Say 500 is what you use for a coupon. They're all in the chat room there. You can obviously always call Rory. I'll put your name and number in there, and he'll call you, or your Skype username. And there's his number, 786-732-4656. Give him a break. He's probably going to be swamped with a lot of calls as people have questions and buy the stuff. But again, I think it's I hope that you found this. I didn't. You'll be out of Doug. You'll be out of town for the next 10 days. Can you buy Compass now and then have support help me in 10 days? Yeah, of course you can. Just let them know. No problem. They'll put it in whenever you want them to. What program was 849? It showed the previous screen. 849 was that's the trading room. The trading room itself for a year. Sarah, that's the trading room, which includes the alerts, by the way. You get in the trading room, you'll be in my room. Now in my room, that room, I'm there from about 9:15 to 4 o'clock every day. I trade all day long. I'm not making a lot of trades, but I'm watching all day long. I'm answering questions. People are posting stocks that they're interested in. So I put up the charts. So we have a lot of interaction, a lot of education in there talking about finding high probability trade setups. I switch back and forth between TC2000 and the Compass system to go over the technical analysis I'm finding. If somebody recommends it, they like a trade, I'll show them exactly why I like it or why I don't like it, and why. Software has an annual fee. That's right, Daphne. Where is the link to buy the Compass now and the discount code? If you go into the chat box here, it's got the Compass trading system there. You click on that, and you would put in, if you want the Compass system, if you want it for a year, it'd be $1249, $598. So you would use save 50% on the Compass trading system and save 500 on the quarterly. On the options live trading room, again, save 50% for the annual and save 50 for the monthly. And the alert service, save 50% for the annual on the alerts and save 200 for the 296. Again, that's all in the chat box there. And also, if you call Rory, he'll take care of all this for you. When I clicked the link for the room, the annual deal price $11.49. That's not right. Just if I would call Rory, it should not be. It should be the room, as we showed here, is $8.49. And if what it shows, if you put in say 50%, it's gonna go to the $8.49 for you. But if you have any questions, just call Rory and he'll make sure you get it correct. Great. He'll make sure that you get it at the best price. Brian, you're welcome. Yeah, I'm glad you like the information on the Heiken Ashi candles. Listen, I found them very useful, and I found that when a lot of traders, they might have heard about them, but they don't really know the intricacies of how to trade them. I think knowing how to use them in trading is just as important as knowing what they are. Yeah, it says the sale ended January 11th, but it didn't. It doesn't. You just go in there, you'll get processed fine. And if you have a question, just call Rory. Brian, you like them too. Yeah, listen, they're really helpful. They've really helped. They help to take some of the noise out of trading and they give you some more conviction when you're trying to get into or out of a trade. All right, so again, if you have any questions, call Rory. This is really important, 786-732-4656. Leave your number, he'll get back to you. And again, these are the prices that you'll get if you put the 50% off code in there. You're gonna get the alert service for $798 by saying save 50%, that's for the year. $296, save 200 is what you would write. That's gonna give it to you for a quarter, 1 quarter. Options live trading room, save 50%, gives you $849. And you put a coupon code, save $50, and you'll get in for a month for $1.48. I don't really think a month is long enough, to be honest with you. Just my opinion. I think, a month is fine, but it takes longer than that to get a feel for it. And the Compass system itself, save 50% for a year at $12.49, and you can get it quarterly if you want by putting in save 500. This piece of software, once you're using it, you're going to want it all the time because it tells you if the institutions are in the trades or not, and that's really, really important. All right, so again, I appreciate everybody spending so much time with me. I hope it wasn't too long. I'm sorry if it was. I did want to spend some good quality time on the Heiken Ashi candles and how to identify them and how to use them. So hopefully everybody has a great afternoon. And again, call Rory if you want to subscribe to any of these. He'll make sure you get the very lowest price that you can on all of those. So again, appreciate you being here. Thanks so much. We had a really nice crowd. I do appreciate that. Thanks, John. Yeah, Heiken Ashi is good info. It certainly is.